Hey guys, welcome back to the channel, hope you're all doing well. I thought I'd do a quick video today about liquidity and just how I personally see smart money traps and just areas that I would not look to get involved in a trade. So first of all, as always, I will just go through and explain a little bit about what I mean, and then I will show you some real life examples on the markets just so you can get, a feel for it yourself. So first of all, what I'll do is I'll just kind of show you what I'm, meaning right here. So let's just say we're in a bullish market, right, and we've got our impulse leg up. And this here is now our trading range. We've probably broken a high right here, and we've obviously broken structure. We're continuing the bullish trend. And then what you might see is you might see price come down to some sort of demand zone right here. And a lot of the time what you will notice, if there's no inducement or no liquidity within this leg, and we've not actually generated or engineered any liquidity in this leg, is what a lot of times you will notice is we might tap in here, we might get, a fake change of character. And then obviously people will start getting involved. And then, we might come down, sweep this low, and then we might continue the, the bullish trend. So kind of what you're going to want to wait for is something like this, right? So if we've got, again, we're in a bullish market, right? We've got our impulse leg. We're coming back towards a perfect demand zone. This demand zone, it sweeps, it breaks structure, it meets all of the confluences and all of the criteria that you need to see for your demand zones. Kind of what you're wanting to look for, right, is three things. So for me, you're wanting to look for equal lows, equal highs. You're wanting to look for trendline liquidity, and one that I personally like the most is a fake change of character. So let's just say we're coming back, right? So we've got this impulse leg right here, and what you might see is some sort of complex pullback, so price might be coming up and down within this, trading range. And then, price is now approaching towards our demand zone down here. And then what you're wanting to do is you're wanting to wait for, engineered liquidity. And obviously there's no liquidity within this leg. Let's just assume that there's no liquidity within this leg. What we are looking for is obviously the market to engineer liquidity. So you might want to see something like this. So we come down, we tap into our demand zone, or maybe we're just above the demand zone. We get our fake change of character. People are now getting involved in the market. Maybe they, change their demand zone. Maybe they're looking to try and get involved within this leg right here. And then what happens is we come down, we might tap into this demand zone and then go. But a lot of times what you will see if we don't engineer liquidity within this leg right here is you will see this POI totally get wiped out, take out this low, and then this low right here will then be used as liquidity before continuing our bullish trend. And this is kind of what you will want to look for, right? So let's just say demand zone. So I've got a demand zone down here. Obviously there's no liquidity in this leg, no inducement, no nothing like that. What we've got now is we've got our fake change of character. So we've taken the low. Let me just get the drawing tool. So we've taken the low, taken the high. People are now getting involved in the market. What you're doing is you're waiting for the early buyers to be taken out of the market. This low is then liquidated. We tap into our demand and then we continue the overall bullish trend. So that's just kind of what you're wanting to look for, guys. I'll go through and show you a couple of examples on the charts right now. So if we come down, what we're kind of looking for, if I just go ahead and delete this, we've kind of got a couple of examples right here. So what I did mention before is obviously we've got our POI, it meets all of our confluences, so it sweeps, it breaks structure, so it sweeps this low right here, sweeps this low, and then we go ahead and break this high right here, which means it's obviously broken structure. It's a really nice POI, it's got imbalance, it's got, everything that you'll probably look for if you are looking at a POI. And then what you will notice is that we've got no inducement and no liquidity within this leg right here. And then we've also not engineered any liquidity within this leg. What happens then is we come down, and as I mentioned before, this POI has then been used as liquidity before continuing the overall bullish trend, following our higher time frame narrative. And then as you can see, we've got another example right here. So we've got a sweep, we break structure, so we break this low right here, we break this, we sweep these highs right here, and obviously we've got this point of interest and it looks pretty nice, So we've got no inducement within this leg right here. We sort of engineer liquidity with this high right here, but for me this is just one single high. So like I said before, I like to see trend line, I like to see equal highs, equal lows, and also fake change of characters. As you can see, none of this has occurred yet, and then what happens is this totally fails. And another reason why this does fail is because ultimately the high time frame is bullish, and this trade, if this did work out, would obviously be counter trend to the overall higher time frame. So if I just go we'll go on GU now and just look at a quick example. Again, we've got exactly the same thing right here. So again, what we've got is we've got this leg of price right here. We've got absolutely no inducement, no liquidity within this leg. We've got our demand zone down here. And then obviously we're coming back correctively, which is a good sign. It's showing us that momentum is to the upside. The overall higher time frame again is bullish. But what happens is we've got no inducement here. We generate no inducement here, no liquidity. As we can see, we've got this low, which you could kind of say is inducement, but for me, I'd like to see, again, equal lows, equal highs, trendline liquidity, or, a fake change of character. And we've got none of that here. What happens then is we come down, we take out this demand zone, use that demand zone as liquidity, use this low as liquidity, and then we go ahead, continue the overall bullish trend in line with the higher time frame. So what I'm going to do now is I'm going to jump on USD CHF and just show you an example of when I would consider us to have engineered liquidity. So if we jump on USD CHF right here, as you can see, we've got a really nice example, and I want to show you the guys this one because it's not fully clear, but it's absolutely brilliant example to show you. So what we've got, again, we've got our price leg here. So we've got our price. There's no inducement here. You could say this is inducement, but for me, a little bit far away from the POI. What we've got is we've got a change of character here. So we've got a change of character. Take off the low, take off the high. People will start then getting involved within the market. People might want to then start getting involved somewhere around here because they might think, we've got our change of character. We're not coming all the way down here to this POI. And the overall idea is to take out this weak high right here. So they might end up starting to take trades from around this section. But what's happened is obviously we've come down, we've swept our inducement, that has been taken. We've tapped into our POI, continued our bullish trend. Again, what we've got is we've got our fake change of character. So we take off the low, take off the high. But kind of what we've also got is we could obviously consider this relative equal lows. And we've also got trend line liquidity. It's not as easy to see on a 15-minute chart. But if I go ahead and go into bar replay, and if we drop down onto the 5-minute chart here, as you can see, we've got perfect trend line liquidity. So we've got this absolutely brilliant trend line, comes in, takes out all of the early buyers, taps into our zone, continues bullish. So this is the overall idea and what I would look for if I was going to trade a certain point of interest. As you can see on obviously EU and GU specifically, these here are smart money traps. You don't want to be trading from zones like this, especially if there's no liquidity to be taken, because obviously liquidity runs the markets. You need buyers and you need sellers in order to fill your positions. So essentially what's happening is obviously if you're winning, there's someone else losing, and if someone else is winning, you're losing. So you need to keep this in mind and just, notice where the liquidity is. And if there's no liquidity, you want to wait for, engineered liquidity before you go ahead and get involved in a POI like this. So I just thought I'd do this quick video, guys, about smart money traps and liquidity. If this video did help you out, please leave a like on today's video. As always, if you've got any questions, leave them in the comment section down below. And without further ado, guys, thank you very much for watching, and I will see you in the next one.